Hello and welcome to London Stone Securities. Whether you're an experienced investor in the stock market or you're thinking about starting a portfolio for the very first time, don't move a muscle. I'm about to share with you the best 10 trading tips that you've probably ever heard, taken from over 100 years of trading experience from the best analysts, brokers and traders that I've personally had the pleasure to work with. So, in reverse order, here's our top 10 trading tips. Trading tip 10, the right tools for the right job. Being a successful investor is all about being smart. Everybody at some point has made money in stocks and shares, especially in a rising market. But far too often, investors either end up paying more tax than they need to, or they get stung with annual management charges or early redemption fees, and all because they've chosen the wrong investment vehicle. That's because investors will often use the wrong tools for the job, which makes their investment approach inefficient, and that inevitably leads to poor portfolio performance. And that's why, before you make any investment decision, you really need to ask yourself 4 simple questions. Number 1, what am I looking for? Capital growth or income? Number 2, what's my appetite for risk? Number 3, what's my time frame? i.e., when do I need my capital back? And number 4, what's a real motivation for my investment? For example, if you're worried about paying inheritance tax and you already have a large capital gains tax problem, then you could consider buying AIM companies within a stocks and shares ISA. Why? Because firstly, AIM shares are exempt from inheritance tax, IHT, after 2 years. And secondly, by investing within a stock ISA wrapper, this also means that any capital growth or dividends are completely tax-free. Let's use another example. Let's say that your overriding goal is to preserve your capital, but at the same time you want to beat the rate of inflation because you need to pay, let's say, for your children's university fees in 5 years' time. In that case, it could make sense to invest in either a short-dated gilt or a very low-risk corporate bond where you know that your capital is guaranteed and where there's a 5-year date to maturity. And so that's the idea. It's just about careful planning. Sounds simple, doesn't it? And yet hardly anyone really takes consideration of the tax breaks available to them, or if they do, they certainly don't take full advantage. With the continuing changes in government legislation and tax rules, you always need to be a step ahead, and there are lots of clever vehicles that are now open to you that just weren't around a few years ago. From stock ISAs to SIPs, from CFDs to spread bets, each vehicle has its benefits if you know how to use them. You could even look at venture capital trusts, VCTs, or enterprise investment schemes if you're a high rate taxpayer. Whatever the case, you need to choose the right investment vehicle and strategy before you make any investment decision. After all, making money is one thing, but keeping it is something else. So that's our top tip number 10. Thanks for watching, and please do watch our next top tip video.